Good morning, everybody. This is Gary Pullitt. It's on December 16th, 2025. And I was asked to do a little bit of a couple markets together, analysis of them on a short-term basis. So I'll be happy to do so. And we'll do the E-mini, the euro currency, and we'll do gold, kind of a different, well, it's a combination, right, as far as that goes. But all interesting charts. So let's start off our 15-minute even S&P chart. When you look at the daily chart, we're kind of near the highs, but nothing really is really pushing them up or down. Markets are kind of drifting, and the markets actually head into the holidays, the Christmas holidays, the New Year's. The markets tend to be somewhat firmer in holiday week. I call it a feel-good rally, but a lot of it now gets extended. These holidays get extended out for a couple months versus over a period of a couple of weeks. And so the markets tend to be more flatter versus have this rally and break. So we're doing the 15-minute break and 15-minute chart, and we want to take generally a day previous, maybe 2 days previously, the highs and lows, if that fits. As you can see, the market basically is lower from where it's been since yesterday, obviously, right? So the thing we want to do is that we don't want to draw a line from this red line here, because that's not a buying bar. But here, when the market tries to react from it, we can temporarily draw a line right here. The green, you want to extend to yellow, that's fine. Or red, that's fine. You can get across like that. Okay. So that's kind of your support action in the market. The previous lows overnight and everything else. Generally, if nothing is not really happening, news influx, the market will maintain the integrity of the overnight lows and highs within a couple hundred hours. I think that's because simply no one's going to take the market out and things of that nature, right? So we get to the point to where the market now has, we're always looking for the supply areas of the market that are clustered areas. So here's a high. We're going to mark that high across. Okay, simple market that does that across. Everything else. So get up there, and if you look closely here, you'll see these high end closes more or less. This is the absorption here. Okay, this absorption here. The small range on the right hand side with the higher end close. That's the absorption level. Okay. Now, remember, mind you, the market's coming from weakness, so you can get absorption on a short-term basis, but the longer-term stability negative, right? And you have to look for other time frames. So you get here, nicely done. We get low end close here, a little reverse absorption, and then we get a market that springs here, or attempts to spring. Okay, this would be an entry here in the market. Okay, that'd be an entry into the market, and it's above the creek, and it's a function of you have enough cause to sustain sideways action. So that's the edge there. Now, what can we look to get out of? Well, the first selling area is up here. That'd be the area that you want to get out of it, right? So you get a market here, the absorption goes up, and all of a sudden it does this. This is not what you want the market to do, right? Your market to go near resistance and have a wide range bar, and this is your overnight. I'm not putting volume in. Wide range bar and the close on its lows. That's not a probe to go higher. Your market's downward, but that's some of selling coming in as the market makes a higher high from the previous bar reaction. Higher out of the bar reaction. Okay. So we get out of the market here. Basically, we'll scratch trade. If you get trades that you make no money on, and but they're properly set up, that's our goal. So those of you that work with me today, or the newsletter, whatever, our goal is not to lose money. Okay. If we have a trade that does not work out, Our goal is to hopefully lose as least amount of money as possible or to break even. In this case, since we had a absorption process here, and the market did not mark up to a point where it was going to hold the gains there, we're out. Okay? Market without follow through and reacts here. It's not a good enough edge to buy. Because if it's sprung or a little bit lower, maybe, but wouldn't buy that market, especially because it's coming from weakness. So wait, this bar doesn't give you a definitive sell. It doesn't do anything. It doesn't really upthrust, goes down, market's here. So another market showing some weakness here, not reacting. So what the chart actually shows is that the market has background being bearish, has some short cover with absorption higher. Yeah, absorption went into resistance and sold off. This area of buying here should have gave you a move up to here. It didn't. Okay, it fell short. This is why you need to liquidate if the market shows selling of that. It was showing up and it would have gone a little bit lower close with no really volume. Okay, you would have kept it for a move back up. But in this particular case, the move was so violent down after the absorption process, it was like the CM was waiting at higher levels to get out of the long and to get short. On a short-term basis, you cannot wait around for that. If you're on a daily basis or a basis where it's longer term, you can do that. You can hold on to that. But when a market is showing you weakness short term, you can have the momentum of going down. So you may have 4 or 5, 6 of those in a day that show you that and scratch and get frustrating. But if you're reading your right markets, you may have cards that give you a small loss or a break-even trade, but you're going to get through the absorption process and have a really nice day if you're catching 1 or 2 of moves. Okay, so keep that in mind. That you're 50 chart, you're going to be dabble in and out of the market often and take small losses and break-even trades. You have to have a mindset to be able to do that. Longer term, 60-minute hourly chart, you can sit back there and wait a day or so. But a 50-minute chart, they need to be monitored for any change of character or change of behavior. Well, market that shows absorption and then runs into selling is a change of character in the market. It may do nothing on the longer term, but short term it does. And now the market's retesting the lows here, and the market's coming to weakness. So we have to have a good close right now in the spring level and back into the trade range to be a buyer. You just can't buy this market here at price levels. Why? Because the background is negative with selling, and you're buying weakness. So you want to make sure that bar here shows some strength by closing mid-range or higher and some stopping action to the market. Okay, so keep that in mind. When a market's coming to weakness, the market's going to prove itself before you buy it. If a market's coming from like just long liquidation and not showing supply and kind of grindy lower, you could buy the price of that spring or the price of that support area because the odds are it's not going to break through it. When you have supply in the background, you can be wider and it gets stopped out in the market. So you're conscientious of that, okay? So and it's really important to understand those two differences because if you get stopped out, you're gonna be stopped out because you're wrong in the market. Okay? Stopped out because you're wrong in the market. But you're buying it from supply, you gotta make sure that market has a decent close. So in order for you to buy the market, your stock's got to be under that reactionary low. Okay, so that's the 15-minute E-mini S&P. Let's go over to the euro currency, and let's see what they have in store for us there. Well, as far as that goes, so we'll go to Forex here, and we'll look at this thing, and it should be euro. Okay, and now we have a situation where I don't know what techno is. Let's see, so there, and now you have a very interesting chart. Okay, so this is an easy read chart. This is a chart. So we have markets going up, and you get some type of news that comes out here. It's probably called a news item. I want to mark that bar. Boom. Okay. It's because you would sell this bar to high end, but this market tells you that the party's over. Okay. I don't see any background there, so the party's over to new highs. There'll be some moves. Okay. You can since you have cost built, not a lot of it at that point, but enough built, you can sell the low there because that's an upthrust because they're selling here and the higher, it got retested higher here. So you have two selling bars there, right? One, think it was like a preliminary supply, and a buying climax type of thing in your mind. That selling came in, got retested. The upthrust told you that the market was bearish. Had the market stayed near its highs, not upthrusting it or not going down sharply from that low, you'd held on to the trade. In this case, the market reacted and gave back everything you gave before. With that selling in the background there, that's a must get out of if you're long and possibly if you're comfortable with the short. Your objective is short, which will still be active, will be here. Right? Price buying bars, demand bars, or selling bars and supply bars tend to get retested. So we should test back down, and the euro curve is down to that level again today since we're long. Now, right now, the market is kind of meandering back and forth, and because it's basically they have Europe is closing, so the market will take its own complexion with the market being at a level to where it should do another test support down there, so they don't see any move up to the upside now. So, but this first selling, they get slapped by a second selling. The second selling is the sell, not this one. This one, you know, you're going to get something to retest the high. You did. The retest as an upthrust tells you distribution. Good chart, good lesson there. Okay, good chart, good lesson. Any questions you don't know anything about this, please feel free to let me know. Okay, and try to get these closely, you know, try to get these out to you, but not make it very long-winded. Okay, right. So this is the euro we just discussed, right? And that's a 15-minute euro, and we talked that ad nauseum as far as what we think is going on. The market should test the lows. Okay. The last one on the list here is gold. In gold, we have something very similar, almost to euro, where this is a spring that happens. Market's bullish. There's a spring that goes here. Now, here you have going up, vertical. You have a spring right here. Thinking that the market's bullish is going to make new springs. It doesn't, because it just sit on the market here. You get this little demand bar here, okay, going up there. So you have this up down close we talk about. Remember, up down closes that tend to be a reversal to what happens. So, okay, so we have an up bar, good, low end close, mid range close, high mid range, low. These back and filling, the high low closes is selling by CM and buying by CM within that trade range to keep the integrity of the market until it's ready to pull the plug. Marcos here, a couple low end closes, tells you reverse absorption, and you get exactly what you want. At that point, it's all should be profitable. It all should go your way. You make retracements back and forth, but for most part, you've upthrusted and shows selling underneath our previous support, and the market now under the previous support here, the market came back down, and we can get back down to about 431, 40, a couple more hours today as far as that goes. The first goal would be here. So we'll see where it takes us. It goes up down closes on the high is generally a reversal type of situation. That's what you get the mid range, lower mid range, lower mid range, middle, lower. This is distribution unless you have marked out. So I think that volume, just to show you that watching the price action can be very beneficial. And that's a quick idea of all three of those markets. And it's a pretty good analysis of where the market's at today. Thank you very much.